What's up guys, this is J and welcome to my channel. My camera is not working properly today, so I did a voiceover for this weekend stock picks, but I'm sure it doesn't matter much as long as I can show the charts up on the screen. And without further ado, let's get into the charts. Let's take a look at futures market first. The market flushed quite a bit early last week, which probably scared away lots of investors for the first few days of the week. But both Nasdaq and S&P 500 held its support line and made impressive comeback. For SPY, it didn't break below the trend line, and as for Nasdaq, it just bounced off of the trend line. Just by looking at the charts, I lean a little bit more on the bullish side in short term. I'm very excited to play the trades next week. But Nasdaq needs to break above this 13,770 points, and for the SPY, it needs to break above the 4,200 points in order for the market to move. So do watch out for those levels. First stock pick today is Twitter. Twitter is back on our watch list for the second time. More and more tech stocks are coming down, and I can see that they are now almost bottomed out, which is now giving us great price to buy in. This goes same for Twitter, since it is one of the most beat down stock from the tech sector, and it is actually holding its price right now above of the first cut loss line we've drawn last week. I actually wanted to come back near $45 so that I can be more comfortable to buy into the dip trade more aggressively. If this trade comes down to 3 wave correction, this will start to bounce up at this level right now, or consolidate here for a couple of weeks. If it wants to make another correction, I believe it will bottom out around the wave E right here, where my second buy zone sits. Next up is Spirit Airline. Save is also back on the watch list. It broke below the first cut loss, as you can see here, but came right back into the buy zone again. I really do feel that the airline stocks are strong right now, and their correction is done. I will probably buy more into the stock after watching its movement on Monday. You can look at other airline stocks such as like American Airline or United Airline, and they all completed the triangle correctional wave, and looks like they're all ready to move up soon. Next up is DE. It's John Deere. It is an agriculture and construction company that has been looking very bullish throughout the year, as you can see. Very strong trend line drawn. Most of the companies in this sector is currently on very bullish run, so why not ride a wave instead of trying to fight the trend that's going against the tech sector right now. DE seems like it just finished the 5th wave and consolidating until the earnings, which is up next week, I believe. The trend right now on the market seems like earnings report does not affect the stock price that much. If there is an earnings report coming up, the stock just seems to be flushing every day. So I will be prepared to pick up this stock when it flushes after the earnings, but since the whole sector seems to be pretty bullish overall, I believe it will hold the trend line, and that is where I would go into the trade. Right there on the buy zone, this would be one of the safest play for this week, I believe. Next up is DHI. DR Horton. It's a construction company as well that has been moving its way up slowly but steadily post-pandemic, as you can see here. It had a great earnings report recently, and after the stock price exploded, some investors seems like they're taking some profits out right now. This could be a great opportunity for new investors to buy into this stock, since it has been consolidating in between $70 to $80 right here for a very long time. That's about, let's see, it's more than like 6 months, I believe, and this made this level quite thick and strong. it makes sense for me to buy some shares before $80 level if it ever comes down here, and where I believe correction wave C will end. As you can see from here, A, B, and then flush another bit more to C, and then start to bounce up. Next up is Disney. Disney flushed right after their earnings report last week. We saw this coming and talked about this happening on our last stock picks, and it just briefly touched the buy zone and bounced right back up. I do like to hold Disney for long term, but we will have to watch out for it if it breaks below the $160 level here. But until that happens, I will probably buy this dip, hoping that the dip does not keep on dipping. Next up is Tesla. Tesla is another stock that I'm holding for my long-term portfolio. Although I believe Tesla have more way upside. By looking at the chart only charts, I can see it coming down to where fifth wave started, which is around the $450 level. Looking at the 2 days charts right now, if I take account that this flush on early March this year is correction wave A, and little bounce right here is correction wave B, I see that it might come down to the same length as wave A, coming down to $450 level. Coincidentally, that is where the fifth wave started. But since Tesla is very strong cult-like stock, it might start bounce up from here. But since I see this coming, and by looking at the chart, I'll be on the little bit skeptical side and wait till $500 to come, just in case. Last up is Boeing. Boeing is one of my bullish stocks to buy during 2021, and it is coming down to a very interesting level for me to buy in, which I already did on Thursday last week. It has retraced and came down to my buy zone, which was set covering the 0.618 level from the high of the third wave right here. I believe now it is about time the stock picks up some pace, and if the volume kicks in, it will start to move up to the fifth wave. Alright, y'all, thank you for watching. If you liked the video and think this was helpful for you guys to make some more money on the side, please hit that like button and subscribe to the channel, and see you next week. Bye bye.